Hello friends, hope all of you are doing well. Welcome back to India for IAS Current Affairs series. In this Current Affairs series, we bring topics which are in news, which are important from examination point of view, especially UPSC prelims and mains, KS prelims and mains, and also KPSC Group C exams and SSC exam. So this Current Affairs series, it brings topic which are relevant to the examination point of view, and also the analysis of the current affairs topic, it has been done in 360-degree overview. That means whatever you study in this video, that is important for prelims, mains, and also interview. And whatever you read PDF handout of this video, that contains all the information which is relevant for prelims, mains, and interview. In this video, we are going to study about Monetary Policy Committee, why it was in news, key details of the Monetary Policy Committee, its functioning, structure and meetings, significance of the Monetary Policy Committee, and challenges associated with functioning of the Monetary Policy Committee, and few key terms associated with inflation and repo rates. Recently, Monetary Policy Committee was in news because the central government, it reconstituted the Monetary Policy Committee ahead of the RBI rate review. So this RBI, it used to review the inflation rate, that is a repo rate and reverse repo rate. This changes in the repo rate and reverse repo rate, it has been done through the Monetary Policy Committee. So the main function of Policy Committee is inflation targeting. So before, ahead of the RBI rate review, what central government has done? It reconstituted the Monetary Policy Committee. Now we will briefly study about Monetary Policy Committee. Monetary Policy Committee is the committee of the Reserve Bank of India. It is responsible for determining key interest rates and managing India's monetary policy. It was constituted in the year 2016 as per the recommendations of the Urjit Patel Committee. So Urjit Patel Committee, it recommended the formation of Monetary Policy Committee. The aim of Monetary Policy Committee is to make the monetary policy process more transparent and independent. This Monetary Policy Committee, it is responsible for setting the benchmark interest rates in India, known as repo rate. So the repo rate setting is done by Monetary Policy Committee. Its primary mandate is to maintain price stability while keeping in mind the objective of economic growth. So its primary mandate is to maintain price stability while keeping in mind the objective of economic growth. Coming to the constitution of the Monetary Policy Committee, the Monetary Policy Committee, it was constituted under this section 45 ZB of the RBI Act. So this was constituted as a part of institutional framework introduced in the year 2016 to improve the transparency and accountability of monetary policy decision making. Coming to the composition of Monetary Policy Committee, it consists of 6 members. 3 members are from RBI, including the governor of the RBI, and this governor of the RBI is ex officio chairman of the Monetary Policy Committee. Then there were 3 external members who are appointed by the central government. The decisions of the Monetary Committee are made by majority vote. In case of a tie, the governor has a casting vote. He cannot vote in the first instance. In case tie happens, the governor will go for casting vote. Now we will briefly discuss the mandate of the Monetary Policy Committee. So the Monetary Policy Committee primary mandate is it has a responsibility of setting the repo rate. So it sets the repo rate. So then what is repo rate? It is the rate at which the RBI lends money to the commercial banks. Then the second goal of monetary policy committee is to maintain inflation within the target range set by the government. So the target range set by the government for the inflation is 2% to 6%. So with a central target range of 4%. So it is 4% plus or minus 2%. So it is the inflation target set by the RBI. Coming to the functions of the Monetary Policy Committee, the first one is formulation of monetary policy. The Monetary Policy Committee determines the policy interest rates that influence the borrowing and lending rates in the economy. These rates impact inflation and overall economic activity. Then the second function is inflation targeting. So, what is inflation targeting? The main responsibility of the Monetary Policy Committee is to keep inflation within the target range. So, here the target range set is 4% plus or minus 2%. That is 2% to 6% range. The inflation should be kept within this range. Then the third function is decision making and transparency. After every meeting, the decisions and the reasoning behind the rate changes are made public. So, the reason being in order to ensure transparency in decision taken while setting the repo rates. Coming to the meetings of the Monetary Policy Committee, the Monetary Policy Committee meets at least 4 times in a year. So, it has to meet at least 4 times in a year. It means after every 3 months, it has to meet. And the schedule, that is timetable or schedule of the meeting, are pre-announced, and the minutes of the meeting are made public, so in order to ensure transparency. Coming to the significance of the Monetary Policy Committee, so the first significance is it ensures accountability. So how it ensures accountability? Monetary Policy Committee, it ensures accountability in monetary policy decision making by including the external members who are appointed by the government with expertise in economic matters. Then the second significance of the Monetary Policy Committee is and transparency. So this Monetary Policy Committee, it enhances the transparency of the process, that is setting the repo rate. So as the rationale behind the interest rate decisions is now disclosed to the public. Earlier it used to be the arbitrary decision making done by the RBI. Now it has to be made to the public. The third significance is the shift to inflation targeting has helped the stabilize inflation. So third significance is stabilization in inflation. Since the Monetary Policy Committee primary goal is to target the inflation, so this is stabilizing the inflation expectation in the economy. Now we will briefly discuss the key terms that we used in the while discussing Monetary Policy Committee. The first one is repo rate. So repo rate is a rate at which RBI lends money to the commercial banks. So here RBI, it lends money to the commercial banks. So the rate of interest that RBI charges, it is called as repo rate. Then the second term is reverse repo rate. So it is the rate at which RBI borrows money. RBI borrows money from the commercial banks. So that is reverse repo rate. Then coming to the third term, inflation targeting. It is a framework in which the central bank aims to maintain inflation within a specific range. So that is called as inflation targeting. Within a specific range, the RBI is going to maintain the inflation. Then the current inflation targeting is 2% to 6% with a midpoint of 4% for every for a 5-year period ending March 31st 2000 March 31st 2026. So till 2026 March 31st, the inflation targeting is 2% to 6%. So this is all about Monetary Policy Committee. based on the topic that we have discussed so far, that is Monetary Policy Committee. So here we have provided one prelims practice question. This question contains four statements. Go through all the four statements and comment your answer. The answer and detailed explanation for this question is available in the PDF handout. This PDF handout also contains the detailed notes of this video, which you can download by joining our Telegram channel. Thank you for watching. See you in the next video. Till then, happy learning.